Who pays the mortgage during a probate in Florida? The answer is somebody better be paying that mortgage or you risk being part of a foreclosure. But whether you want to pay that mortgage or not is a complicated question. Like most good lawyer questions, the answer is it depends. Now, if you're a surviving spouse and you think you're going to be hanging out in that house, maybe you're going to make that mortgage payment no matter what. Elective shares and another critical part of this calculation. What's the money that's going to be coming to a surviving spouse versus other heirs or something like that? Another critical part of this, of course, is homestead. So, surviving spouse to stay in the house, but that doesn't forgive or excuse the obligation to make a mortgage payment. But the question is whether that surviving spouse is obligated on that note or mortgage. If they're not obligated on the note or mortgage, and there's not a bunch of equity in that house, mama or the surviving spouse may not want to be taking whatever money's left and throwing it at a mortgage company to a house that's underwater, maybe it's got damage, or it's just not worth the value that the mortgage is on. It's underwater, as they say. Now, that's a completely different situation if the surviving spouse is living in a property or a kid is living in a property and there's a ton of equity in it. Lots of properties out there, mom, dad, grandmom, granddad, spouse, whatever, has a big fat house and a little bitty mortgage on there. And the reality is after they die, that mortgage debt, that obligation doesn't go away. It can be delayed in many circumstances, the payment obligation, but the debt is still due. Now, there's another interesting dynamic on here, and this has to do with like reverse mortgages. Obviously, reverse mortgages may not trigger a payment obligation, but sometimes a death triggers a default obligation. Kind of second and related topic is sometimes folks have taken out some of these credit insurance obligations on mortgages, which can delay payment obligations for some extended period of time. So like I said, like any good lawyer legal question, the answer is it depends. What it demands that you do is a careful analysis of what the financial circumstances are. What are the other assets in the estate? Are you pulling elective share? And are you going to retain the house in the long run? So if this is an interesting topic, like, subscribe. If you have questions, drop it in there. We'll answer it in a subsequent follow-up post.